tech are all under pressure, and then you have some of the auto names like Hero MotoCorp, etc. The broader market sell-off is something that I'm particularly worried about. Remember, the Nifty has gained a lot of ground in the last couple of months, and today, some money could be taken off the table. Generally, there's also this fear psychosis, right? When you start to see a bit of a sell-off, you're like, oh, let me just take my positions and move out.
Yeah, so it'll be quite tempting actually from a bullish perspective, because yesterday you saw a 500-point correction nearly from the top, if you include today's fall as well. And with a stop loss at around 20,900, 20,950, if you're a risky trader, maybe in fact some would look to go with that trade, because 20,900 is important, and on the Nifty bank, 47,000 is rather important. We're starting off 280 points lower out there. So let's see how this goes. Okay,
yesterday the bank Nifty was the one that got hit very hard. So just keep an eye out on that this morning as well. It doesn't look like it's going to be a great start, but we'll take what we get. The first tick on the index is down 120 points, 130 now, 150 gone on the Nifty. It's severe, the sell-off that we're seeing in early morning trades. Sensex straight off the back is down 550 points. 160, 170 gone on the Nifty now. This is looking quite intense. Take a look at the mid-cap index, 600 points gone straight off the back. And the Bank Nifty as well is down about 400 odd points. The advanced decline ratio is an ugly picture this morning, 1,800 stocks on the declining side. Now, the important part to note here is that the 21,000 level, right, that is, it's just about hanging in there for the moment. And it's a sell-off across the board. No sector, no stock is spared. So banks are under pressure. IT is under pressure. Adani Group stocks are, of course, high beta in nature, so they are selling off as well. And then you have a couple of these metal names, Coal India, etc., that are down and out. There's not a single stock in the green, except ONGC perhaps, which is just up 0.5%. Otherwise, the market is looking very weak. So after a 160-point sell-off, now the Nifty is sort of settling around 120 points lower, 120, 130 points. So the initial gap down opening has taken place, and the Sensex is well down about 400 odd points. But as we said, the bigger problem, and perhaps the place you need to be a little more cautious on, is the mid-cap index, because they are vulnerable to deeper slides.
Well, that's right. Just take a look at a few stocks actually that are selling off. You have Indian Bank. They've done a QIP, I think, in the last few days. That one is down close to around 8%, one of the top losers in terms of volumes. Suzlon is now down from around that 43 mark. It's come down to around 33. It's down close to around 5% as we speak. And some of those names that had run very, very hard on the upside, they're coming for some profit taking. IRFC, that's down close to around 3%. You have PFC and REC, both of them under some pressure today. AMI Organics, that's down close to around 5% as we speak. On the flip side, what's gaining? Z Entertainment, they like the release that's come about. They believe that that extension is going to come about. Maybe, in fact, Sony and Z can go ahead and get that deal done. So for the time being, there's a relief rally that we're seeing up there, up close to around 3%, one of the notable gainers. You have Oil India as well, that's up another 3.5%, so good going out there. Piramal Enterprises had come out with that disclosure. For the time being, the stock is down close to around 3%, and City Union Bank as well is down close to around 4% as we speak. Some kind of stability, as I said earlier, 20,950 that holds out. That's going to give the bulls some kind of reason to hope that we see a bit of a bounce. As we speak, we're up close to around 60 points from the low point of the day. We were down 180 points when Sonia was taking that market check. Now we're down 110 points odd. But the Nifty Bank, that's the one I'll be looking at, whether it can bounce from here on, and it could be the driving factor. Advanced decline ratio, 5 stocks declining for 1 stock that's advancing. Prashant.
Okay, well, 100 points lower is what we have, 21,030 on the index at this point in time. And market breadth is negative. 3:1 in favor of declines is the market breadth, which is pretty poor to begin the day. Now, just to take a quick look at a few other names, look at Varun Beverages, just to run you down some of the names. So Varun Beverages, by the way, the day's high yesterday was up 10%. It closed 5% higher, but I think it's coming under a little bit more in terms of selling right now. There is, I think we mentioned AMI Organics. Piramal Enterprises is another one, which, of course, that information to exchanges this morning. So stocks under pressure this morning as well, almost 3% lower on Piramal. I think we mentioned Suzlon. Zomato is down to about 120-ish, 121 kind of levels. Again, large volumes in most of these names. There is a City Union Bank, which starts about 4% lower, 4.5% lower, 149 on 150 now on City Union Bank. And you look at DOMS, the recent listing, which is coming under some selling pressure as well, is down about 5%. But I think volumes still need to pick up, because volumes are a little low for this point in the day. On a market which is starting with some amount of momentum, albeit on the downside, but I think volumes perhaps will pick up. Yesterday was a very large volume day, of course, so we'll track that as well. For now, I think it's more down than up. I mean, clearly more down than up. Sonia.
I don't know, but I'm seeing signs of buying as well in this market, right? I mean, the Nifty, when we started off, was down 160 points. It's now down less than 100 points. And look at the list of gainers. There's IRDA, which is up 2.5% right now. There's BML, which is up 3% right now. There's Mazgaon Dock, which is up 4% right now. Dixon Tech. So the market is not missing the woods for the trees. They're looking at some of those companies which are doing well, which are in high growth sectors, and using the opportunity to buy into it. Of course, you can expect volatility, but the market has its sights perhaps set on buying into dips.
I'll tell you, I was just a short anecdote. I was at my kids' parent-teachers meeting yesterday, and I met we're bumping into fathers, and I met this one gentleman who runs a fairly decent sized manufacturing business, and he was almost wistful. He was saying, well, what is the point of running a business? Because, the return on capital invested in the business will never match up to what you make in the stock market. I mean, it's come to the point is the market's done so phenomenally well.
It's
you actually hear
people.
It's spoiled people.
In the last 3-4 years.
It's made people almost believe this is just too easy.
Indeed.
Right?
It's
It's
made money making
money.
very
Which is the
easy,
problem.
Which is it's a big problem, right?
And particularly for portfolios that were started in 2019 onwards, they're saying 20% return is a game. Like when you tell them that I'm investing, I'm putting money via the SIP route, and I'm hoping to get 12 to 14%. They're like, what happened to my retirement plan? I was playing 25% CAGR for the next. I said, no, we have unnatural years which we've seen in the past. But I think, to be fair, you should be hoping for that 12 to 15% returns.
Oh, yeah.
And then, if you get a couple of stocks that do very well, then hold on to those. But otherwise,
but recency bias is so powerful, right? Because you've done, last year's been good, the year before has been good, the year before that has been good. So it's just human psychology, and markets, people get carried away. That's the whole point. Just to complete that point, I don't know if the person I'm talking about is watching. He did go up to his father who's started the business. He said, well, this is, and of course, he told me, he said, well, my father asked me to get out. He said, focus on the business and markets will take care of themselves. So, the people who've been there, who've seen cycles, they do realize, the returns are not 20-25%, they're not given, and there's a lot of hard work. So 12 to 15%, I think is...
I'll be very happy.
Par for the course.
It's par for the course, absolutely. Well, the market is down 90 points, 21,000 odd is where we are at on the, I think, index, 0.5%, just not even 0.5% lower. Gautam Shah is with us, founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here. Thank you very much for your time. How are things looking to you, Gautam, with the rally? I think, if we were talking yesterday morning, it would have been so different, right? It's just that yesterday, post 1 o'clock, we had that sharp slide, and the pictures changed maybe a little bit. But your thoughts near term?
Good morning, Prashant. I'm actually quite surprised that the market chose the last 10 days of December to do what it did yesterday, because typically this does not happen. It's a seasonally positive period, and clearly India's outperformance continues. But I think this is a much needed reality check. I think we've had a parabolic move, not just for the mid caps and the small caps, but for the Nifty itself, something that we've not seen in a very, very long time. So I think the quality of stocks that were rallying, I think, was questionable. And when you reach a point where price action dictates fundamentals and trends, is when you start getting a little concerned about the trend. And that seems to have got corrected yesterday. I see it as a very normal shakeout. I think India's outperformance in the world will continue. Global equity markets continue to be rock solid. But in terms of levels, I think this area of 21,500 was a technical resistance. We've corrected from there. And I think we'll find support quickly. So this looks like a knee-jerk passing shakeout. Unlikely that this will convert into a trend on the downside. And there is very good support coming in at 20,900, and possibly with 20,500 being a base. I do see the market stabilizing soon and starting to do well again. But I think now going forward, what's going to happen is that it's going to be a more balanced market, a more realistic market, where I think quality will be rewarded. And I think all those great CD stocks, which were doing well, that will now lose the momentum after yesterday's fall.
It's interesting you say that, Gautam. Hi, good morning. I was chatting with a wealth manager the other day at on one of my shows, and he said when we onboard clients, the first thing we tell them is that every year this market will see a minimum 10% fall. So if you're ready for that, then come in and invest into the market. Every year or a couple of years. So I guess it's just par for the course, the kind of shakeout or the pullback that we're seeing, right? The give back. But how does one approach it? Do you wait a bit before you buy into the stocks that you like or buy into the stocks that are looking attractive? Or do you start now itself? What's your expectation from here on?
Well, Sonia, the 10% point that you made, I think is easier said than done, because yesterday was a 1.5% fall and people couldn't take it. So imagine if you were to see a 5 to 10% dip, what kind of an impact it would have on markets, and it would have on emotions of people, because we are so used to seeing this market go up on a daily basis. I do believe that, India is in a sweet spot. There is no doubt about it. All the headwinds that we had a couple of months back in terms of inflation, interest rates, geopolitical risk, the assembly election results are out of the way. And therefore, I think a shakeout was needed. And this will just make the market a lot more lighter, a lot more healthier. And as we approach support levels, I think quality stocks will see a quick turnaround. So as I said, 2,900 and 2,500 are my important supports. And I do see a lot of opportunities in sectors like IT, pharma, banks, metals, power, fertilizer, infrastructure. So I think one should just be stock specific. Don't bother too much about the index. And let's not forget global equity markets in general. Look at Europe, look at US. I think they're also very, very strong. So unless they derail, it's impossible that India will derail on a standalone basis.
All right. Hi, Gautam. Good morning. Just hold on for a minute. I just want to ask my director to pull up the advanced decline ratio, and both those two lines should come up for our viewers. When we started off in the first few minutes itself, you had only one stock that was advancing and 5 stocks that were declining. That's quickly turned around. We're just few minutes into trade, but now you have few more advancing stocks in comparison to the declining stocks. And when in the first few minutes we were down 170 points, well, if you were able to keep a stop loss of 30, 40 points approximately, then risk reward could have favored you. For the time being, that's worked out. But let's see whether or not we can hold on to the 20,900 to 20,950 level that Gautam as well was just mentioning. Gautam, for 2024, one wonders whether it's going to be the year of the large caps that will return. So any couple of names you could give us, in terms of which could be those stocks. HDFC Bank is one stock that's been a relative underperformer. Reliance Industries has gone through a bit of consolidation. Do you think one of these could do really well from here?
Well, I'm not very sure whether 2024 can be the year of large caps, because to be honest, the kind of domestic liquidity that's coming into the mid caps and small caps, I think it's roughly 8,000 crores on a monthly basis. I think that's been a game changer. A lot of people are comparing today's market with what happened 10 years back or in the 2003-2007 bull run, which is not a fair comparison, because that entire rally was led by foreign liquidity. And this market, 16,000 crores with 8,000 crores coming into the mid caps and small caps, has just changed the game for the broader markets. So I think the broader market strength will continue. Quality will be rewarded. I think if you stay with the industry leader and challenger in all the top stocks in the mid caps and small caps, you will do well. In the large caps, I think you have to be very careful with your pickings. I think in the banks and IT are spaces that we like. So in the banks, we like SBI. I think SBI is a stock that can surprise and could be one of the star performers of 2024. So that's a stock that we continue to recommend our clients. And followed by the IT space, I think where stocks like TCS, Tech Mahindra, HCL could actually deliver better than index returns going forward. So just choose your stocks carefully. I think over-researched, over-owned stocks might not do as well as the names that I just put out.
So, Gautam, while you're speaking, we have Rajat Rajgarhia, who's joined into our discussion. He's here with us in the studio. And he entered the studio and he's looking at all of us and he's like, why are you guys so serious, right? I mean, it's just a 1 day, half a day fall that we've seen so far. So, Rajat, welcome to the show. The market has this kind of a setup, right, where one day, one severe fall and everyone goes into panic mode. But you've seen so many of these cycles. So how do you sort of wade through it?
Hi. So, yeah, well, while yesterday's fall definitely made the headlines, we must remember we are ending this year with almost 15-16% Nifty gain, 30% plus mid-cap gain, and maybe a large number of stocks which have doubled this year. So it's a year which is ending on a good note with a good return. And I think it's important that market goes through such phases of correction, because we have a lot more room to gain in the years to come, we just can't make all gain in 1 year. So these corrections are always good, right? I think the kind of momentum that has been built in on the overall macro and top down remains intact. But yes, when you are in the market, you have to face such days, right? They may not just be one day, they may last for some more time, but nothing to worry.
It's so funny, right? If you map 2 or 3 weeks ago, there was FOMO factor in the market, right? People would say, oh, we wish we could buy defense stocks earlier, wish we could buy, you know, some of these other buzzing spaces. And now, suddenly, there is the opposite of FOMO. But what do you do? Do you buy now or do you sort of wait for a few days? What's the approach when markets fall like this?
Well, I think at all points of time, whichever level markets may be in, you have to be very stock specific. And at every time, you will still find stocks which are reasonable, whether the markets are at their top or the markets are into a correction phase, right? Overall, when you look at it, you would still believe that this is a market which is trending up, right? Even if it corrects 3-5% here and there, that's okay. I mean, just see the kind of gains we made post the state elections. We have just given maybe 10-15% of those gains, that's all. So I think really nothing to worry. We are still into an uptrend, right? But you have to face such corrections. And by the way, such corrections in a up market are normally very quick, you know, big leg down, but they recover also quite well.
You know, I was not here. Actually, Najul was not there. I was not there yesterday, and I came back in the evening. And I was looking at Twitter and X now, and stock market crash was trending. I said, "What happened?" You know, it was just 1 day, 1.5% pullback. But anyway, Rajat,
you know, Prashant, just on that, yesterday the markets closed negative. Many a days in such markets where Sonia mentioned about FOMO, if the markets correct 100 points also from its peak, that also may be viewed as a crash, right? We are used to, we have been used to market closing at high every day for the last few days.
Used to 1.5% gains, not I think that's a very powerful recency factor in that sense. Rather, let's talk about ideas. Market, of course, will do what it wants to do, but you're a ideas person, themes, and what will do well from here. So tell us, what's top of your mind right now? From here, what are the sort of wealth creation opportunities?
So I think the largest wealth creation opportunity remains financials. That may be a consensus view, but at times consensus works also, right? I think everything on the macro augurs well, but more importantly, when you look at the growth cycle ahead, every financial is entering this growth cycle with the pristine balance sheet. In fact, just 2 days back, we released a detailed report on the state-owned banks, right? I think historical multiples will not do justification to the kind of growth that they are looking at. I see most of these banks making newer multiples in this cycle. So I think it's going to be a great investment vehicle when you look at the all. And by the way, today financials has such a big diversity, not just private banks, not just state-owned banks, not just NBFCs, but you have insurance, capital markets, wealth management firms. You can build a large India financial portfolio and still make reasonable amount of money. The second theme which we have been very...
what are the, name 5 names in that space? Well, across the spectrum, top ideas from an absolute return perspective, not about what will do beat the benchmark in the next 1 month or 2 months, but absolute returns, because that's what our viewers are concerned about.
Look, I think the two best ideas in financials remain as ICICI and SBI, right? The two large banks, the two banks who are approaching both the balance sheet and the growth cycle very well. And valuations, if you look at, State Bank would roughly be high single-digit P and ICICI would be just about 10-12 P, right? They still are at 50% discount to the markets with a growth rate which is going to be in line or better than the market over the next 2 years. I don't see how this gap is going to remain for long. So I think you have the two large banks and then you can buy one each broader bank between the two spaces, right? So I think there are enough number of ideas in financials you can choose. And depending upon which product, which management you like, the options are far too many in this space for one to pick from.
All right. Hi, Rajat. Good to see you in the studio. Rajat, what about the small cap space? You know, you just mentioned at the start that it's been a good year for the Nifty. It's been an even better year for the small cap and the mid cap space.
Yeah.
Do you think there are signs of frothiness out there? Or do you think that, in fact, still there are plenty of names that could do very well from here?
So I think just the mere fact that the index has gone up in a particular year may not be the best barometer. because historically always small caps don't move in a linear manner. You in a 5-year period you make your return in 2 years in the small caps. Sometimes first 3 years you make nothing, next 2 years you make, or the other way, right? I think more importantly is that when you are into a growth cycle with a moderating or a peak interest rate view being formed, liquidity plays its own role in the small cap space, right? Secondly, I think many of the small caps may be small on a cap basis, but when you look at the business opportunity that many of these companies are operating in, you can well make a case of a 3-5 year profit pool being big, right? But yes, it's very important to know what valuation you are buying a particular small cap, because some of the small caps or the mid caps have become actually 3-4x this year, right? This market gives you the opportunity to buy stocks once you know when to buy, right? So you just need to be little patient in the small caps, because today many pockets of large caps have more value what used to be in small caps a year back, right? So you just need to balance your portfolio.
I want your thoughts on renewable energy, because that space has come back in a big way, right? And that's the government focus area as well, whether it's startup power, Inox Wind, JSW Energy, all of these stocks sitting at fresh highs. Any thoughts on whether there are more upsides here, and are you a buyer of this story?
So, when you look at this space for almost like a decade, I think the space, didn't do anything much, right? Companies had their own share of issues. This year, I think the two things that have happened: first, the government focus has brought a lot of limelight. And second, I think the balance sheet management has been done very well with debt reduction, raising money at different levels, right? So both business leverage and financial leverage has come into play. I would think that while the opportunity from a 3, 5, 10-year point of view globally in India looks very interesting, right? Which models will actually survive, thrive, and build further from here, right? Needs to be, given more time. I would say that the easy money of stocks multiplying 4 or 5 times from very distressed to a reasonable valuation has happened. From here, spotting the winners in the space is going to decide who will further multiply from
So
here.
who are going to be the winners? Rajat, you walked into that one.
There are so many winners already. I mean, look at Inox Wind.
Yeah, Prashant, the day I spot who is an obvious winner, I'll come here and
No, but what do you
Give us some ideas, right?
Yeah.
I mean, from the large cap names, we got a couple of financial names.
Yeah.
Give us a couple of, top buy ideas that you'll have, X of the financials, since we already discussed that.
I think one of the very powerful themes that we have been advocating last 12, 18 months is this entire travel and tourism, right? I think we have been writing about this now since the beginning of calendar 23, that there is something very different happening in this country now, right? You look at airlines, you look at hotels, you look at all the ancillary businesses which are related to this, right? I think business is booming, and this is here to stay, right? The outbound travel and within India and the inbound travel from outside India into India is going to make sure that the best brands, the people who are able to deliver good product, are going to gain a lot of market share.
Airlines, hotels, what?
I think you
airports?
can pick, you should pick the best names within all
There
of
aren't
them.
that many actually. I mean, it's like,
And that's why whichever names are the selected ones will benefit more.
Okay.
Because you have some scarcity value of, but by the way, over the next 12, 18 months, you may see many options through IPOs coming into this space. This is one space, Prashant, which I think is going to be very vibrant, because this is here to stay, right? I would include to some extent this entire leisure entertainment business also. Look, actually, the key theme is, as the per capita is rising in a linear way, where are the incremental savings going to flow through, right? Traditionally, we talk about mutual funds, insurance, etc. Look at what's happened to hospitals, the kind of business momentum that has got built in, because some of these are very structural changes in the country that are happening. And you need to be early into the big brands, companies who are positioned well, right? You've seen market cap creation in hospitals happening. I would think travel, leisure, entertainment, you will see similar market caps getting built even from here over the next few years.
in terms of published ideas in that space, travel and leisure, what Indian hotels? What's the?
I would think Indian hotels at the top end and Lemon Tree in the mid cap is something that we like, because both of them are using this growth cycle very well to build their portfolio and enhance their earnings.
And hospitals? Which are the top ideas?
So Medanta is something that we had covered some time back that continues to do well. Apollo Hospital is another name. So again, you see, last 2 years, number of companies have got listed and everyone has been doing well. Again, here, spend, organized segment doing well, and valuations which were reasonable till some time back. Of course, now valuations have reached at the top end, but I still think the earnings growth for these companies are going to be very strong.
Okay, well, on that note, thank you for coming in here and brightening up our mood. I mean, it's tough to be very optimistic when the market is falling like this, but thank you for some sane advice, and Happy New Year, by the way, to you.
Thank you. Same to you and everyone.
And it's been a great year for all of us. Hopefully, it will continue to be that way. Well, let's slip into a quick break on that note. On the other side of the break, we have Sandeep Buddhiraja of Max Healthcare, who will be joining in to talk about the upsurge in COVID cases and a new COVID variant. Well, we have to talk about that again. We will connect with Bhanu Prakash Srivastava of Bharat Electronics as well to talk about their order wins this year and the demand outlook so far. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. The market is down about, I think 90 points or so. The Nifty Bank is down 3/4. Nifty Bank has corrected more sharply. And on the Nifty, we got just under 0.5% cut. Now, one of the things which many were talking about yesterday was as one of the reasons, incremental reasons for the market starting to get a little jittery is this new COVID variant, right? Now, the new COVID-19 subvariant has been detected, and as of yesterday, a total of 341 cases have been recorded, with 292 cases coming in from Kerala alone. Now, is this serious, and what are the implications? Let's welcome in Dr. Sandeep Buddhiraja. He is Group Medical Director at Max Healthcare. Dr. Buddhiraja, great to have you with us here. Thank you very much for your time. Prashant this side. Just that question, I mean, is this COVID variant serious? I mean, and what should viewers know about this?
We are calling JN.1 is from the same lineage of Omicron. And as we know, Omicron has been the prominent strain now since November of 2021. So it has not really mutated in a way we were seeing first 1.5 years of COVID, where you were getting alpha, beta, and then delta wave, which created havoc. So it's been a stable lineage of Omicron. Of course, it has kept mutating over a period of 18 months or so. And the latest mutation is this JN.1. Now, what is important about these mutations, and particularly about this strain which we are talking about, is because of these specific areas where there have been mutations, this virus is more transmissible. So person-to-person transmission is more effective and faster. So that means it can spread more widely and in a shorter span of time. But the good news is that the disease it will cause, or it is caused so far, has been mild. So it has behaved no differently from the Omicron strains we have been seeing for the last 18 months. So most of the people will be presenting with simple flu-like illness. So, fever, cough, cold, runny nose, sore throat. So symptoms are more limited to upper respiratory tract. That Delta thing where people started developing pneumonias and hospitals were overwhelmed and the mortality was very high, I don't think we will see any of that. And the reason for that is because, of a very good coverage of vaccination in India. We know that over 95% of Indian population has been vaccinated. And multiple natural infections which people have gone through. So it's a combination of, or we call it as a hybrid immunity, which people in India have got. So I don't think that it will cause any serious severe illness. It may cause a slight upsurge in the numbers, but most of the time this illness will be mild. Only thing we have to keep a watch on is for elderlies and people with comorbidities. So the antenna and guard has to be high. People need to be cautious. People who have symptoms and infections should wear masks, avoid going to crowded places, and if you have these symptoms, consult your doctor. But I don't think absolutely there's any need for panic.
I mean, so it's basically more infectious, but it's extremely mild, just flu-like symptoms, right?
Exactly, yes.
So obviously no need to test or anything. I mean, there's no, you just go to the doctor and, I mean, get treated for a flu. It's like, it's a flu. So
Yeah, so
thanks for clarifying
the
that.
testing will be decided by the doctor, but the government needs to increase its surveillance and do more genomic sequencing just to keep a watch as to how it is trending. This strain has increased from 3% globally to 27% just in about 4 weeks, and had 41 countries. India is one of those. So I think it is clearly increasing globally. But the disease being caused is mild, so mainly cough and cold. So I don't think there will be too many hospitalizations or deaths because of that.
So far, have you seen any hospitalizations, not just in your centers, but in your industry? I mean, what are the numbers looking like at the moment?
See, there's a lot of flu which is going in the air, which is non-COVID. So the seasonal influenza virus, which is typically seen in this cold weather post-monsoon. So that upsurge we are seeing, and in fact, the number of flu cases all this year has been more than what we have seen in the previous years. And we do know that flu itself, which is the simple, normal, common flu or the common cold, does cause hospitalizations, does cause pneumonias, and does cause mortality, which is a normal expected trend, and that's what we are seeing. Personally, me or my colleagues in Delhi, NCR, have not seen COVID admissions, and whatever case reports we are getting to know is down south. So we know that Kerala is reporting cases, Karnataka is reporting cases, Goa has reported cases. So far, we have not seen COVID cases being reported in Delhi, but hospitalizations by what we call as ILI or influenza-like illness or SARIs, severe acute respiratory illnesses, which is due to other viruses, non-COVID viruses, we are seeing. And that's a normal annual trend which we see, which is no different.
Okay, all right, Mr. Budiraja, we'll thank you on that note. Thanks a lot for joining in and giving us a quick update on what's happening with the COVID-19 situation. It's important to point out that at the moment it's just a flu-like situation. There are no hospitalizations, so there is no need to panic, just like there is no need to panic with the market fall. By the way, the market has seen a recovery, so don't lose sight of that. The mid-cap index is actually in the green, and the Nifty as well. We started off with a 160-point cut, remember? Look at the way the Nifty has risen. We were making this point just a couple of minutes ago that the market is choosing to buy the dips because they are getting opportunities in several buzzing sectors and stocks. And at least for now, the dips are getting bought, which is a good thing for the bulls. The Bank Nifty has also, sort of cut its losses at the moment. Just trying to get you a couple of stocks that are looking good. Z Entertainment, by the way, in the news, it's up about 5%. Tata Power, renewable energy has been a big mover. So Tata Power is up 2.5%. IRDA is up 2.5%. SJVN is up about 2%. Power Grid is up 1.5%. So these are spaces that are looking good. Mitesh Thakkar is back with us. Mitesh, it's pretty much all over the place, really, this market. But what's the recommendation for the rest of the day? And what are the stocks to look at now?
Yeah. So I think, Sonia, my understanding is that this is still that part of a pullback, which is playing out, and you will get some choppiness, some volatility, which would be more than what it was seen for the last few days, purely because of the fact that this will be a slightly violent correction and pullback. So my understanding is that I think, closer to today's low, I think that's where the support's coming. I was looking at 20,950, 21,000 for the Nifty. We got a bottom over there. The Bank Nifty, I was looking at about 46,500, 600 area. I think we got a high at low at about 46,900. But I think broadly, this market doesn't look like it will break down. It will go into a declining mode. But yes, I think, it will be some choppy consolidation for the next few days. So try to, buy lower to these, try to buy lower at the support levels, 46,700 for the Bank Nifty and about 20,950 for the Nifty. I think if these levels hold, I think we should be good in a couple of days or about 7 to 8 trading sessions. Having said that, I have a buy on Voltas for the time being. That's a stock which we have recommended to our clients, so it comes with a disclaimer that we have vested interest. That's a buy with a stop at 917, which is today's low. and I would look at a target of around 975 on the upside. And HDFC Life is something which I would recommend selling with a stop at 648 for targets of 620.
Okay, all right. Thanks a lot for that, Mitesh. Well, in early morning trade, in the first few minutes itself, we saw a very large trade on AMI Organics. Nimesh joins us. He's picked up some details with regard to who could have participated in that block. Nimesh?
Hi, Nigel. And as you rightly pointed out, there's a large block, nearly 12% equity got changed hands in AMI Organics. Now, what I understand from sources, the ex-promoters of this company, which are now classified as public shareholders, they were the likely sellers in today's block deal. So the combined holding of the ex-promoters is close to 17%, and they've sold 12% in today's block. So not sure whether it's a clean out trade from the ex-promoters, but they've sold a large chunk in today's block deal. In terms of buyers, I understand some domestic mutual funds, AIFs, and a wealth firm was a buyer in today's block. So that's the limited information that I have got, that the ex-promoters of the company have sold a large chunk, that is 12%. And in terms of buyers, all institutions have bought in today's block deal.
All right, thanks a lot for that, Nimesh. Well, Bharat Electronics is one stock that has been one of the biggest movers this year. The company's cumulative order win for FY24 is over 23,000 crores, and they've recently secured a new 4,500 crore order from the army. So this defense space is buzzing. My colleague Vivek Iyer caught up with Bhanu Prakash Srivastava, the chairman and managing director, to discuss more on their order wins and business outlook. Listen in.
As of now, with this 4,522 crore order of electronic fuses, we stand at around 23,200 crores of order book in this financial year.
Okay, sir. So, can you give us some more details about this particular order win itself? What is the kind of execution timeline that you're looking at, and what kind of margins do you intend to operate at?
This is a long-term requirement of electronic fuses by Indian Army. This is for 10 years, and every year we have to supply around 5 lakh electronic fuses. This we have won on competitive tenders. We participated. The procurement process started somewhere in 2018, and it fructified now after a long time. Margins are normally product-wise margin we don't share. But yes, we are profitable in this.
Absolutely, sir. So now we are still left with one full quarter as far as FY24 is concerned, and you've already exceeded your order inflow guidance by 3,200 crore. One quarter still left to go. Which are the key orders in the pipeline? Which are the orders that you expect to book in Q4? And what is your revised order inflow guidance for FY24?
We anticipated around 20,000 crore plus orders based on the whatever orders were in pipeline. But thanks to the speed with which MOD has been working, we met the guidance and reached 23,000. A few more orders are in pipeline, but then it depends upon when at what point of time they will fructify. One is that EW system for ships, which is around 2,000 crores, which is in pipeline, which we expect to be fructifying in this financial year. Some smaller orders may be there. So seeing in pipelines, we expect to cross around 25,000 crore in normal course. If at the end of the financial year, MOD fast track some more, then we will share with you.
So the revised guidance that we are getting from Bharat Electronics in terms of order inflow guidance stands revised upwards from 20,000 crores to well above 25,000 crores. So you mentioned
25,000 crore plus. Yeah.
Absolutely, sir. So last time you mentioned about visibility in terms of getting orders from the shipyard space. In fact, you spoke about getting artillery fuses orders, ship-based early warning systems that you just mentioned. This is from Goa Shipyard and Garden Reach Shipbuilders. What would be the likely quantum of orders from here? And FI will you be able to book it in Q4, or will it spill over to the next year?
See, we have started working with them. PNC and all is over. So they have to process. Now with their internal, how much time they take to award the order, it varies. Like if you see fuses, we have been talking for how much time? More than a year, every quarter you were asking, and I was telling it is likely to come, and ultimately it was signed on in mid-December. So these orders also, they are in pipeline, various stages, but it is the internal process of our customer, whether Goa Shipyard or GRSC, when it will fructify. But we are on the job this quarter, or maybe we expect this quarter, but we keep our finger crossed about their internal process.
So the market is very keen on knowing, when will you be getting the orders on large projects, especially, the quick response surface-to-air missile. Will you be able to get it in, the first half of FY25?
I don't think first half of FY25 because, see, these are all big ticket orders. This is quick reaction surface-to-air missile. So it will take time. Even they have not taken AON. So once AON is taken, then it will go for finalization, then RFP, after that submission of code, PNC, order processing. It's a long-run process. So definitely first half of 25, I don't see any possibility. Fastest I see that something can happen in the end of FY25.
So last time when you spoke to us, you said that revenue in terms of booking has been a little lumpy because execution trends have been hampered by on-ground challenges. Do you now stick to your guidance of being able to reach 15% in terms of top-line growth for FY24? You'd earlier given a guided range of 15 to 17%. So do you stick to the 15% range?
15% range, we are making all-out efforts, though there has been a challenges in supply chain, which has been further complicated with this Israel conflict. But these are all uncertainties which is very difficult to predict. See, tomorrow some situation improves and then we recover. So we keep our finger crossed. We are attempting to achieve a revenue of 15% growth in this financial year. All efforts are there from our side, and we are in constant touch with our OEMs and supply chain partners also. So let us see at the end of financial year, we are making all attempts to reach to that stage, that value.
R&D spends for you have been a little over 6% of the total turnover in the last couple of years. Now, with these increased R&D spends that you're targeting, can you now start looking at higher margin, more value accretive orders, especially as far as the export market is concerned?
See, when we spend in R&D, it's not only export. All products, our margin improves. Because more value we add, better is the margin.
Sir, absolutely. So a couple of analysts that we spoke to have highlighted two concerns as far as Bharat Electronics is concerned. Number one is the best of top-line growth as well as rising returns over for Bharat Electronics. Number two, will increasing defense production, outsourcing to the private space, diminish the prospects for Bharat Electronics? How will you respond to both of these concerns that analysts have raised?
See, competition will be there. Private sector also will be participating. But then if you see the government policy, government is increasing the procurement from indigenous industry under the Atmanirbhar Bharat. So private sector also will participate. We will also have space. They will also have space. But the way we spend on our R&D, the way we add value to the customers, we remain the preferred choice of the customer. So coming years, I don't think that our growth prospects will be hampered. But then we have to remain competitive. We have to remain spending and focused on research and development to add value to the customer to maintain our momentum.
So last question from our end. FY24 margin trajectory, FY25, what kind of margins are you targeting?
See, what we have given guidance 21 to 23% of that EBITDA, what we are maintaining, this is a reasonable margins in the current scenario, what we are operating. So we maintain that in FY24, and the way things are going on and the project we have order got, and then it will be executed in 25 also. We will be able to maintain in the same band that EBITDA margin.
All right, that's the management of Bharat Electronics with some perspective on the business. By the way, the mid-cap index is in the green, just FYI. I think a lot of stocks have pulled back very, very nicely. The low on the Nifty mid-cap index was 43,281. and we are back in the green on that one. So there was a bit of a break of the 20-day, and then from there the market actually pulled back very sharply. The small cap index is also in the green. I think there also that break happened. The Nifty small cap 20-day was at 14,388, and we got to about 14,091. So yeah, I mean, at the day's low, there was a break of that level, and then from there, there's a sharp pullback which has happened. No such luck for the Nifty yet, but keep an eye. 90 points lower is what we have on the Nifty, but on the Nifty as well, there's been some recovery which has happened. You can have the market breadth. It was 3:1 in favor of declines, and now it's moved into a comfortable positive zone. So some 1360 stocks are higher, and some 800 stocks are lower. So that's essentially the impact of what's happening in stocks outside of frontline indices. Mitesh is with us with what he's watching out for. He's been, of course, tracking the markets with us. Mitesh, anything else you're noticing? I mean, mid caps and small caps in green now.
That's right, Prashant. So as I said, I think this will still be choppy. I'm very sure that we are not done with the volatility as yet, and I think during the day we'll have bouts of more volatility. In fact, next couple of days could be spent like this. But as I said, as long as we are not breaking the key areas, which is 46, 650, 700 on the Bank Nifty and about 20,900, 950 zone on the Nifty, I think we should be all okay. And after about 8 to 10 days of consolidation, we should again be ready to move up. So it looks good to me. I think this is just part of the normal shakeout and a pullback to the 20-day averages.
I think the Inox India listing is happening as we speak, and we'll have the prices coming up in just a bit. So, we'll have that 40% jump on Inox India. So it's a premium of 44%. 950 is where it's listed at as compared to the issue price, which was 660 odd rupees or so. So they make specialized, cryogenic sort of equipment to store, liquids, etc., or rather things which are things much below the freezing point. So, LNG, for example, is a big segment for them. There's liquefied natural gas and so many others as well. So that's a specialized industrial equipment maker with fairly long legacy, actually. And of course, it's part of the Inox group as well, which is listed out there. So the other group companies, of course, are Inox Leisure, which are listed. And there is also Inox Air Products, which is unlisted. Inox Leisure, of course, is now merged with PVR. And the other one is Inox Air Products, which is into industrial gases, etc. So that's a fairly decent listing. No real peer comparison for this one. If you want to look at what something else in the same line of business is trading at, because nothing else in that line of business is listed yet.
Also, Prashant, the best part about this business and what the management told us when they met us last time is that they are in a space where, they have cryogenic equipment, right? So the demand for that is expected to surge because of increased demand for cleaner fuels. So they were saying there's now supplying to Tata Motors for hydrogen commercial vehicles. They're also doing projects with ISRO. And this whole renewable energy, cleaner fuel space is picking up in a big way. It's the government's, big focus as well. So that is the niche area that they're looking at. As you said, the parentage is very strong. It's a debt-free business at the moment. The revenues, 2 years ago, the revenues were 600 crores. Now it's almost at 1,100 crores of revenue. So there's a good up move that we've seen. Very high margin business as well. So there's not many complaints for this one. Of course, it's now, there's no peer comparison, so there's no valuation comparison as well. But now, of course, it must have gotten expensive post the listing. But very, very strong listing from this one. Let's do one thing. Let's take a quick commercial break. On the other side of the break, Manisha Gupta will join in. She will put the focus on the commodity market. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Let's get a quick handle on what's happening in the world of commodities now. Manisha Gupta is joining in. Manisha, are the commodity markets as volatile as equities these days?
As always, Sonia. But I'm looking at a commodity which has a bright chance for 2024, and that is silver. It's trading at a 4-month highs right now, and we did see the prices gain up in the month of November by nearly 9%. That is because the street is now coming to terms that the global mine silver might see 2% of a decline in 2023. As far as consumption goes, in the meanwhile, that has seen a jump up in 2022 and 23 as well. So the global demand estimates are that you could have seen 8 to 10% of a jump up in this current year itself. When you look at the numbers that we saw in the previous year were as strong. The investment in physical silver was 18% higher in the previous year. It was a record 329 million ounces. Also, when you look at the silver industrial demand, that has been on the higher side as well. So last year was a 556.5 million ounces, which was a record highs. For this year, the expectation is that you could be looking at 550 million ounces of a demand continuing as well. So we are looking at strong deficit concerns for a fourth straight year as we head into 2024, and that in turn would be supportive for prices. Last year was a 3.7% of a gain, and this year until now we've seen 5.2% of a jump up. It has underperformed gold both of these years, but the expectations are that in 2024 you could be looking at outperformance coming in from silver. This is what we've done in sense of price volatility in this year. We started on a stronger note, and then we saw a sharp correction by the month of March there. But since then, since the month of May, it has been holding between that $22 to $26 an ounce. Currently at around 25.5 is what we've seen in the month of December here. Remember, when you look at the last 3 years, though, silver has been confined to that range of around $12 on the lower side to almost 29 on the higher side, is how we've seen 2020 to 2023. All-time high, of course, for silver has been at around $49.5 per ounce. That was way back in 2011, and we are almost half of those kind of levels. So if 50 was an all-time high, we are trading at 25 right now. Is the reason markets believe that as we move forward in 2024, there is an expectation that you would look at investment demand, industrial demand, solar demand, EV, all of those industries actually give support to these prices. So the least bullish of views clearly coming in from the World Bank, which believes 21 would be an average for the next year. Bullion Vault is expecting silver prices to gain up to 29, Capital Economics at 27, and then we move on to the $30 band here, where Goldman Sachs, JP Morgan, Citi, Investing Haven, David Morgan, everybody believes that $30 an ounce is an average that you could see. Of course, there are more bullish views coming in as well. They're 35 and 36 as well going forward. But the belief is that 2024 would be yet another year where you would be looking at bullish cues continuing for silver.
All right, Manisha, thank you very much for that. Look at the market. It's down in the 30s now, 36 points lower, 40 points lower. So it's a very sharp recovery which is coming. This is still very early days, but for what it's worth, after the low which was made right at the word go, I mean, the opening candle was the low, which was 29.76. From there, we are now sharply pulling up. So as we speak, that recovery is underway. We are at 21,123. So just about 25 points lower on the index now. And, as we were mentioning earlier, mid and small caps turned into the green sometime back, about 15 minutes ago. This is, just a remarkable turn of things in the first hour itself. But as I said, it's early. We've got a full day of trading ahead of us. It's a wrap on this edition of Bazaar Morning Call. But stay tuned. On the other side, our special segment, it's the economy comes up. Lata will get chatting with Hitendra Dave of HSBC India, who puts the focus on the big moves in the money markets recently. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
By all accounts, India has put behind an excellent 2023. When we started the year, the expectation was that FY24 growth would be barely 6%, and we are now confident that GDP would be 7% in the current year. The Nifty has outperformed several indexes, rising over 18%, and the mid-cap index a solid 42%. Joining me to decode how Outlook 2024 may be, I have with me Hitendra Dave, the CEO of HSBC India. Hitendra, good morning, and thank you very much indeed for joining us. Well, let me start by asking whether, following the Fed pivot, is an RBI pivot, dovish pivot, in order? We have seen them, after several 2-3 months, actually giving some money in repo to perhaps loosen liquidity or at least reduce the tightness. What's your sense about the immediate cost of money?
Yeah, hi, morning, Lata, and thank you for inviting me for this conversation. No, I think, the reality is we have to step back and see how much the Fed hiked and how much the RBI hiked and how much was front-loaded by RBI versus, let's say, the US Federal Reserve. And when you see that we haven't really matched them lockstep, I don't think we should therefore bake in that we will, the Reserve Bank of India will follow the Fed, assuming that the dot plot is where the Fed is going. I think the central bank has done an excellent job of just ensuring that everybody is now focused on the 4% number, right? And they've put so much of their credibility on that number that I think any RBI action vis-a-vis FOMC action, I think, will be determined, my own sense is, based on the inflation trajectory of India rather than the US rates decisions. To your question on the recent announcement by the Reserve Bank of India after almost many months to provide additional liquidity, my sense is I think they did realize that keeping liquidity as tight as it had become for factors that they hadn't created, which is either FX intervention or currency with public or the fairly substantial amount of tax collection by the revenue authorities, had resulted in liquidity being way more tighter than what they ideally would have desired. And I think this is just to address some of this combination of these three things coming together. I think, they would like it to be closer to between 6.5 and 675 rather than closer to 690, 695, which it had started becoming. I don't think it would be appropriate to see this as anything more than just a tactical liquidity decision and not read it as a early rate signal of some sort. That's my sense.
Well, let me come to the currency. And again, now an immediate view and a slightly longer term view. The Reserve Bank has held on to that 83 to 83.3 for a fairly long time, irrespective of US yields going from 5%, from 3% to 5% to back again to 3.9. Likewise, the dollar index going from 102 to 107 and back again to 102. What's the sense now? We're going to get a lot of dollars, but we are not getting FDI money. Does it look like it's a slow drift to 84 or actually appreciation?
No, so I think it's difficult to contextualize or to verbalize why RBI is doing what it is doing. But my own sense is I think they're taking a slightly longer term time perspective than just a calendar 23 time perspective, right? They are seeing what's happened to the currency over 2 years, 3 years, 5 years and longer term. And they sort of build a gradient for that long term. And in their sense, it does appear that the currency weakness over the previous 2-3 years has been more than adequate. And therefore, this year you can expect or should have more stability. I think that is one part. I think the other is very clearly at an overall BOP level or a current account level. Some of the, like for example, just last night we read from World Bank that India is going to get $125 billion of remittances this year, which is quite a remarkable number, right? I mean, it was just 100 billion just 2 years back, so that's $25 billion extra. I think again, if the economy, as we discussed, is doing as well as it is doing, as an absolute context and also in a relative context, one should expect capital flows, both portfolio as well as FDI. and almost everyone recognizes that part of the FDI slowdown was due to the fairly mixed picture on US interest rates. Well, not really mixed, an expectation that we are higher for longer. I think that is, as you mentioned, just in the last 2 weeks or so has got reassessed. So I think everything would seem to suggest that this period of stability that we are experiencing in the rupee should continue for many, many more months. If we are going to be one of the fastest growing economies in the world, if we are going to be one of the best performing stock markets in the world, if we are going to be an economy where there is enough potential for FDI to come in and create whether goods and services either for manufacturing here or for manufacturing here but for selling abroad or locally, it's very difficult to get a negative view on the currency. When both of us sort of over the years have always felt that the main reason for the currency weakness over the years was inflation differential, and the inflation differential has narrowed quite substantially. I mean, right now it's negative actually, but if the central bank of our country is fixated on 4% and the US inflation for the longest time going forward is going to be around 3%, the basic economic case for depreciation is also, has gone away. I mean, otherwise, if a year and a half back, and I was on your channel and you had told me that US is going to take rates from 0 to 5.5, and what would happen to the currency, I think almost anybody pretending to be an expert like us would have said the currency is just going to fall off the cliff, but it hasn't. So therefore, that tells you a little bit about underlying broader economic changes that are taking place.
No, fair point. Actually, if you look at in the real effective exchange rate terms, the rupee has actually gently appreciated all the way from 2005 onwards. So, we shouldn't get carried away by the nominal number. But Hitendra, you spoke extensively about manufacturing and the attraction of FDI. FDI has played truant all of 2023 in other countries as well, but more so in India, which is a bit surprising because we thought we should get their FDI. And we have not clicked, at least the numbers are not saying. Yeah. Now the government itself is soft pedaling on PLI for various reasons. We haven't seen a bunch of PLI approvals this year. Whatever was approved was in previous years. So, what is the chatter that you're hearing? You may be speaking to a lot of global CEOs and investors. Why is it not happening? India is not seen as the next China. We are coming way behind after Mexico, Vietnam, Indonesia, etc. Is that looking to change? What's the chatter?
Yeah. No, see, I think almost every global organization, global board or senior management that one speaks to, almost everyone tells us that they want to do more in India than they currently do. That is if they are present, and if they're not present at all, they do worry that they could miss one of the most exciting stories to roll out in the world economy over the next 10, 15, 20 years or so. So the mood music, the optimism, the desire to be part of the story is very, very high. I think people aren't very clear whether to be coming here and manufacturing for the rest of the world or coming here and manufacturing for the domestic market. But I think as word gets out about the kind of income increases that people are experiencing, as this 50 to 75 million consuming class suddenly starts becoming 75 to 100 million or 100 to 150 million, and people will not wait for that to happen. They just want to be getting clear visibility to that trend. I am almost certain that the kind of FDI flows we will generate, I think will surpass most of the most optimistic expectations. Okay. I think we have a few things going for us that many other countries don't have. Very clearly, democracy, very clear young population, rising incomes. I think if we just sort out the skilling and the productivity issues, I think that is when you should expect this trickle to turn into a flood. But in the very short run, I think the FDI slowdown, you should attribute also a lot to what's happening in the new age economy, which was a lot funded through private equity, venture capital, and that type of money, which clearly is not an India issue, but it's more a global issue. And as we mentioned, if the rates affect if the FOMC does do what the current market is thinking, then I think that headwind goes down. But I think between FDI and remittances and our service exports, I would be much more optimistic and hopeful that we are in for the best run over the next 5 years rather than the last 5.
Okay. Well, the slightly medium term looks definitely cheerful, but at the moment the money is not coming, so it's a bit of a worry. But Hitendra, what about the domestic CEOs you must be speaking with? You must be speaking with a lot more of them, and the capex cycle has not quite taken off. We see here and there for cement or consumer durables or renewable energy, but not the broad capex cycle that we saw, say, from 2004 to 2010.
Sure. Yeah, so I think I have a slightly different view to this. That particular big capex trend that we saw, particularly after 2008 and up to 2012 or so, I think in hindsight, you know that was not properly due diligence, right? It wasn't properly due diligence by the equity shareholders. It wasn't properly due diligence by the lenders, especially the banks. And eventually what we call the twin balance sheet problem now, or for the last 5 years, the term that we have used, really was projects that really had not been properly assessed for cash flow generating capacity and also had too little equity. So I think comparing today with those days might be wrong. Some of those projects, 50,000, 70,000, 100,000 crores, I mean, we all know all kinds of wrong things that did happen there. So I mean, I'm almost hoping we don't get a repeat of that. But yes, we do get capex. I think the second reason I think we are not seeing the headline grabbing capex is simply because of the consolidation that's taken place in the big mega industries, right? In steel, in cement, even in power, right? There's been fair amount of consolidation. So that's, I think that with that background, I think my own sense is at least what we are seeing is two things. One is, I think, things related to the 10 lakh crore that government of India is spending, right? I mean, anybody who's into construction equipment, road rolling, those kind of things, I think they can't produce enough goods, actually. Some of the people have to actually be put on waiting list. Similarly, in both commercial real estate as well as in residential. Now, this is actually a very heavy employment generating sector. And where, again, you can now see that, the confidence is back and so are the juices are flowing there. But if we are going to measure capex or prospects of our economy or the confidence of India Inc. through those 50, 60, 80, 100,000 kind of projects and largely in the core sectors, I think we are looking at the wrong thing then. I think you should see how many more MSMEs are running, what's their top line, what's their repayment track record, and feel good about it. I think we now need employment-based growth as much as this very large project-based announcements.
Okay. Well, got that. But over there, we enter into fuzzy data territory, Hitendra, with some cantankerous arguments between what the PLFS is saying and the CMI is saying, but we won't go there. But you've given us a very positive picture in terms of capex cycle, what we should look at, and what the world is looking at from India. Thank you very much for joining us in this special chat on Outlook 2024. And you have a great 2024 yourself.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
The Indian market opens weak, but all indices are significantly off their morning lows, led by gains in oil and gas, IT stocks as well. The mid-cap index is in the green.
Zee Entertainment surges 4% after Sony says that they are required to meet Zee to discuss the possibility of extending the deadline as per agreement, and they look forward to hearing Zee's proposals. The stock also comes out of the F&O ban today.
Another stellar listing today. Inox India debuts on D Street with a listing premium of nearly 44%. The stock still holds with a gain of 33%. You don't go anywhere because the management will be joining us shortly to discuss their listing and post-listing plans.
BEL is up close to around 2% as the management tells CNBC-TV18 that they expect to cross their 25,000 crore rupee order inflow in FY24. The company also raises their guidance.
IRCTC jumps over 4% as the stock comes out of F&O ban.
Hello and welcome to Chart.